Good day, everyone. Welcome back to Boardroom Malaysia. In the last video, we covered structured holding companies, shareholders agreement, paying yourself legally, directors, loan, paid up capital, and your company's secretary. Today, we're going into operations and how to stay compliant with SSM, how to open your business account correctly, what a board resolution actually is, and when you need one, how to structure a joint venture properly, the difference between an MD and a CEO, and what happens to your company when you are no longer around. These are the things that keep business running or bringing them down. Let's get into it. Alright, so chapter 1, SSM Compliance. Let's start with SSM, Suruhanjaya Syarikat Malaysia. Most Malaysian business owners think about SSM exactly twice. When they register the company and when something goes wrong. Oh my god. That's a dangerous approach. SSM is not just a registration body, they are an enforcement body. They monitor companies, they track directors, and they have the power to strike off your company, disqualify you as a director, and impose serious penalties for non-compliance. Every Sdn Berhad has ongoing obligations with SSM. Your annual returns must be filed every year. Your company information must be kept current. Any changes, new directors, change of address, share transfers must be filled within the requirement time frame. Here's what most SME owners don't realize. If SSM strikes off your company, you don't just lose the registration, you lose the company name, the bank account, the contracts, everything tied to that entity. And reinstating a struck off company is a long, expensive, and tedious and also painful process. Your company secretary handles your SSM filings, but you as a director are ultimately responsible. Make sure it's being done and done right. Check, ask, verify, because when SSM comes knocking, ignorance is not a defense. Chapter 2, Business Bank Account. Once your Sdn Berhad is registered, the next critical step is opening a proper business bank account. A bank account for your business. I want to be very clear about this. Do not use your personal bank account for business transactions ever. Absolutely cannot do that. It creates an accounting nightmare. Your auditor will have to entangle personal and business transactions line by line. LHDN will question every transfer, and it signals to anyone looking at your company that you don't understand the separation between personal and corporate finance. Opening a business bank account in Malaysia requires specific documents, and the most common reason businesses get turned away at the bank is missing one critical item: the board resolution authorization, the account opening. Your company secretary must prepare this board resolution before you walk into the bank. Without it, most banks will not proceed regardless of what other documents you bring. Beyond the board resolution, different banks have different requirements and different fee structures. Some are better suited for SMEs, some have better digital banking platforms, some have faster processing times for transaction. Choosing the right bank for your business depends on your transaction volume, your industry, and your future plans. Particularly if you are planning to raise financing or apply for a trade facility down the line. Getting this foundation right from the start saves enormous headaches later.
Chapter 3, Board Resolutions. Let's talk about board resolutions because this is something almost every small Malaysian company gets wrong. A board resolution is a formal written record of a decision made by the directors of a company. And you need one for almost everything that matters. Opening a bank account, signing a major contract, appointing or removing a director, taking a loan, declaring dividends, increasing paid up capital, authorizing a large payment, entering a joint venture. Without a properly prepared and signed board resolution, these decisions are not legally authorized. Bank will reject your applications, contracts can be challenged in court, LHDN will question transactions that don't have proper paper trails. Here's the thing most directors don't understand: a board resolution is not just paperwork, it's evidence. It's proof that a decision was made properly by the right people at the right time with full authorization. In a dispute, the side with the proper documentation almost always wins. The side without it struggles to prove anything. Your company secretary prepares the resolution, directors sign it, it gets recorded in your statutory register and filed properly. The cost of preparing a board resolution is minimal. The cost of not having one when you need it can be catastrophic. Chapter 4: Joint Venture. Joint venture are common in Malaysia, especially in property developments, government projects, and cross-border business. And they are one of the highest risk business arrangement you can enter. If not structured properly, the typical Malaysian JV story goes like this. Two parties see an opportunity. They agree to work together. They shake hands, maybe sign a simple letter of intent, and start moving. Money comes in, then this agreement starts. Who controls the bank account? Who makes the decision? How profits are split? What happens if one party doesn't deliver their side? By the time lawyer gets involved, significant money has already been lost and relationships destroyed. A proper joint venture starts with a clear agreement before any money moves. Who contributes what? Cash assets, expertise, connections. Who owns what percentage of the JV? How day-to-day decisions are made? How major decisions are made? How profits and losses are shared? And what happens if one party defaults? And critically, how either party can exit the arrangement. In Malaysia, you can structure a JV through a new Sdn Berhad, giving you a clean separate legal entity, or through a control JV agreement without incorporating a new company. Each structure has different tax implications, different liability exposure, and different administrative requirements. The right structure depends entirely on your specific situation, the nature of the project, the timeline, the parties involved, and your long term intentions. This is not something to figure out after you've already started. Structure it correctly before the first ringgit moves. Chapter 5: MD versus CEO. Let's clear up one of the most misunderstood titles in Malaysian's business: Managing Director versus CEO. In small Malaysian companies, these titles are used interchangeably, but they are legally and structurally very different roles. A managing director is a director who is also given executive responsibilities to manage the company. They sit on the board, they have legal duties under the Companies Act 2016. They can be held personally liable for the company's decision and actions. They have both shareholder accountability and operational responsibilities. A CEO, Chief Executive Officer, is an employee appointed by the board to run the day-to-day operations of the company. They report to the board. They implement the board's decision. They have no inherent shareholding rights unless they also have own shares in the company. In a small Sdn Berhad, the founder is often both the MD who owns shares and sits on the board, and the CEO who runs the business daily. That's fine for a small operation, but as your company grows, and especially as you bring in investors or build a group structure, these roles need to be separated and clearly defined, because the accountability The liability and the decision making authority of each role is fundamentally different. Getting this wrong creates governance problem. It creates confusion in your banking relationship. It creates complications when investors do due diligence, and it can create personal liability exposure for people who didn't realize the weight of the title they accepted. Know your role, know what it means legally, and make sure everyone in your company does too. Chapter 6, Succession Planning. I want to end this video with the topic most Malaysian business owners avoid completely. What happens to your company when you die? I'm not being dramatic. This is a real question that every business owner needs to answer. Because if you don't answer it now, the law will answer it for you. And the law's answer is usually painful for everyone involved. When a shareholder of an Sendirian Berhad passes away, their shares do not automatically transfer to their spouse or children. Those shares form part of the deceased estate and must go through the probate process. In Malaysia, that process can take anywhere from 1 to several years depending on the complexity of the estate. During that time, your company may be in limbo. Decisions that require shareholders' approval cannot be made. Bank mandates may be affected, contracts may be questioned, and the business you spend years building could effectively be frozen while your family waits for the legal process to complete. There are several things you can put in place to prevent this. A properly drafted will that specifically addresses your share and appoints an executioner who understands your business. A nominee director arrangement so someone can legally manage the company while the estate is being settled. A shareholder agreement that includes clear provisions for what happened to the shares when a shareholder dies, whether they are brought back to the company, transferred to a named beneficiary, or offered to existing shareholders first. Succession planning is not something you do when you're old. It's something you do when you build, because the measure of a great business is not just what it achieves while you're there, but whether it survives without you. That's the complete operations guide for Malaysian business owners: SSM Compliance, business bank accounts, board resolutions, joint ventures, MD versus CEOs, and succession planning. Every single one of these topics has layers of complexity that go beyond what I can cover in one video, and every single one of them, if handled incorrectly, can cost you your business, your assets, or your freedom to operate. If any of what I've shared today resonates with your situation, if you're running a business in Malaysia and you're not sure whether your structure, your documents, or your compliance is where it needs to be, reach out to us. We work with Malaysian business owners directly, one on one. We help you identify the gaps, fix the problems, and structure your business the right way. Get our email at the description below. Watch long form video 3 next, where we cover business valuation, raising capitals, understanding your financial statements, and planning your exit strategy. Subscribe to Boardroom Malaysia. Share this with your business owner who needs it. Real business, real strategy, real Malaysia.